welcome to all our viewers in Nigeria and around the world to Business Point here on Global Television, your hub for topical discussions in the world of business. I am Queen Agapa, and today we'll take a look at the news making round in the world of business, beginning first with food prices across key markets, recording a blend of upward and downward shift in June 2025, reflecting evolving supply dynamics and broader macroeconomic pressures. According to the latest Nairametrics food price survey covering certain areas in Lagos, several household staples saw sharp price increases, while others posted notable declines. These movements were largely influenced by ongoing inflationary trends, logistical disruptions, and seasonal supply variations. Dry onions posted the highest month-on-month increase during the review period, rising by 17.65% from 85,000 naira to about 100,000 naira for a big bag. Market stakeholders linked the hike to seasonal scarcity and surging transport costs from northern production zones where the bulk of the commodity is sourced. In contrast, the prices of pepper dropped significantly in June following consecutive spikes in previous months. A big bag of pepper, which sold for about 170,000 naira in May, declined by 29.41% to 120,000 naira. Comparing market average prices between May and June 2025, the Lagos food market in June 2025 witnessed varied price movement, with several staple items experiencing significant uptick despite seasonal expectations, compounding inflationary pressures on households, while some food commodities recorded price corrections. Key staples like yam, maize, rice, flour posted steep increases compared to May. The rise was attributed to strained logistics, seasonal supply gaps, and broader macroeconomic challenges. The food items with steepest price increases would be the tuber of yam, Abuja variety, big size. Average market price surged by 15.38%, rising from 6,500 naira to 7,500 naira. Traders cited scarcity and transport bottlenecks as key drivers. Maize, that's the yellow 50 kg bag, despite being planting season, maize price climbed 14.71% to 78,000 naira from 68,000 naira, reflecting gain supply fragility. While a bag of flour prices rose by 13.11% to 69,000 naira, further impacting bakery and confectionery costs amid persistent wheat import dependency. We also saw our local rice sold for an average of 60,000 naira in June, up 12.15% from 53,500 naira. These price hikes mirror tightening supply chains and escalating production expenses, particularly in grain sector, thereby sustaining pressure on consumer purchasing power. Traders remain cautious as shrinking margins and volatile transport costs continue to affect operations. Several other essential food items posted moderate price pressures across Lagos household, while we saw wheat that rose by 9.88% to an average of 8,900 naira as supply chain constraints and currency fluctuations impact imports dependent products. We saw frozen fish climb by 8.57% to 3,800 naira from 3,500 naira, driven by import cost adjustments and cooling storage expenses. We saw ground flour saw an 8% uptick, now averaging 27,000 naira. Traders also cited producer price hikes and packaging costs. We saw beverages, some of our cocoa beverages increased by 7.30% to 10,730 naira from 10,000 naira, reflecting higher global cocoa prices and distribution bottlenecks. We saw vegetable oil, which rose by 6.15% with an average price of 69,000 naira, that's for 25 liters, and then palm oil derivatives and and processing costs continue to rise. The big question is what's fueling the surge in food prices? Well, the recent spike in staple food prices across markets, particularly in Lagos, is underpinned by a convergence of structural and seasonal factors. A key driver is seasonal scarcity that we've had with crops like onions, yam, currently out of peak harvest, creating temporary gaps in supply. Also, transportation costs have soared, fueled also by rising fuel prices and deteriorating road conditions. These also contribute to the high inflation that we see in food prices. And then the challenges are complicating logistics, especially for goods transported from northern Nigeria. The situation is further exacerbated by insecurity in key agricultural regions, particularly in the northern corridor, which continues to disrupt farming activities and supply flows. Traders also cite growing difficulties in sourcing farm produce under current security conditions. But on the macroeconomic front, exchange rate volatility, the markets have recorded notable price declines in June, offering consumers much needed reprieve amid months on inflation-driven increases. Then the food, according to Food Survey's price survey highlights significant reduction in core household items, reflecting improved supply conditions and seasonal harvest. For pepper, we recorded the sharpest drop, declining by 29.41% to 120,000 from 170,000, following improved supply from northern market. We saw Titus fish down 23.53% to 6,500 naira from 8,500 naira, likely influenced by exchange rate fluctuations and increased stock availability. For tomatoes, tomatoes fell by 19.66%. Gas, about approximately 12.5 kg refill, slid by 15.38%, now averaging 13,750 naira, an encouraging trend for households relying on LPG for daily cooking needs. We saw frozen turkey carton decline by 10,000 naira to 84,000 naira, aided by eased import logistics and reduced wholesale prices. I beg your pardon, we saw it right from 100,000 naira to 84,000 naira. And also we saw yam flour, a 1.8 kg, dropped by 10.54% to 747 naira, reflecting eased pressure on processed yam-based products. For brown beans, a 50 kg is sold for 75,000 naira, down from 82,000 naira amid increased local supply and staple demand. A broader softening in prices was also observed across staples like pasta, cocoa beverages, garri. Though the pace of reduction varied, prices of select items like Irish potatoes, cartons of noodles, about 5 liters of jerry cans of palm oil, and the 500-gram pack of certain pasties remained largely unchanged during the review period. Well, we'll continue to monitor the growing trend with food items and daily necessities for you. Now let's move over to what the Naira has maintained in its bullish momentum. The Naira has maintained its bullish momentum at the unofficial market as it cracked below the 1,600 Naira and 1,650 Naira per dollar on the official foreign exchange market during June and July. The Economist's prediction was based on data showing CBN's efforts to control the country's excessive money supply, which peaked in May 2024. Rally in oil prices also boosted the Naira fundamentals, given that Nigeria is reliant on crude oil for its FX income. Middle East tension weighs on foreign exchange market. The Israel-Iran conflict also caused investors to become uneasy ahead of the Federal Reserve's highly anticipated interest rate decision, which later in the day, which caused the U.S. dollar to falter against most other major currencies on Wednesday. Israel has hammered Iran to stop its nuclear activities in the last 6 days and has declared that the Islamic Republic of Iran needs a new government. So there are rumors that the U.S. military is increasing its presence in the oil-rich region, and investors are worrying that an intervention could intensify the conflict in the Middle East with critical infrastructure like supply chains and energy resources. Well, President Donald Trump has called for Iran Iran's unconditional surrender, the U.S. military is also sending more fighter planes to the region to bolster its forces. A major concern for the market is still supply disruptions in the effects of electronic interference on ship navigation systems. UK Maritime Trade Operations issued a warning, and then other organizations of the petroleum exporting countries members might utilize their surplus capacity to compensate for a drop in Iranian production, according to analysis. However, the dollar has lately found refuge in the market, strengthening by about 1% versus the euro, Swiss, and then Japanese yen since Thursday, which has helped offset losses from earlier in the year. The greenback has lost more than 8% so far this year because of President Donald Trump's trade policies that undermined confidence in the U.S. economy. The dollar's debt and liquidity continue to make it a haven. Fed meeting under trader spotlights. For that meeting, investors are now turning their attention to the Federal Reserve, which is set to decide soon on a potential change in interest rates. Recent data also indicates that the U.S. economy is slowing, a trend compounded by rising uncertainty stemming from President Trump's unpredictable policy approach. Adding to the Fed's challenge are surging crude oil prices driven by escalating tensions in the Middle East. Well, the Fed's outlook for interest rate this year and the state of the world economy will be of great interest to traders who anticipate that the central bank will keep borrowing costs unchanged. We'll take a quick break now, and when we return, we'll look at telecommunications operators in Nigeria have now announced that beginning from Wednesday, June 18th, mobile subscribers in the country will begin to pay directly for USSD services through their airtime. After the break, we'll get these details. Please stay with us. Many thanks for staying with us here on Business Point. Telecommunications operators in Nigeria have announced that beginning today, mobile subscribers in the country will begin to pay directly for USSD services through their airtime. This marks the formal migration to the end-user billing model in line with a new directive from the Nigerian Communications Commission, NCC. The announcement by the Association of Licensed Telecom Operators of Nigeria, ALTON, overrides the earlier notice issued by some banks earlier this month, claiming that the deduction would start on June 3rd. According to ALTON, the migration to end-user billing follows the determination of USSD pricing and services issued by the NCC, which was developed in collaboration with the Central Bank of Nigeria and other key stakeholders. ALTON says this migration aims to create a more sustainable, transparent and customer-friendly framework for delivering USSD services, particularly in Nigeria's growing digital financial landscape. Under the new arrangement, USSD session charges will now be deducted directly from users' airtime at a rate of 6.98 naira per 120 seconds. Customers will receive a prompt to opt in before the charge is applied, and only successful sessions will be billed. A move, ALTON says, will eliminate double billing and improve customer experience. Previously, telcos billed the banks for USSD services in a corporate billing model that led to frequent disputes over unpaid charges. These disputes often resulted in service disruptions, affecting millions of users who rely on USSD codes for financial transactions. Turning now to the Nigerian National Petroleum Company Limited, CEO Mr. Mele Kyari, former CEO, NNPCL CEO, and others have countered the incorporated trustees of the Ajib Indigenous Contractors Association and others who allege that the former unlawfully awarded pipeline surveillance security contract to Tantite Security Services is in the Oil Reach Niger Delta. This is contained in NNPCL and Mele Kyari's counter affidavit before the Federal High Court. Abuja exclusively reviewed Ajib contractors who identified themselves in court as the apex organization representing the interest of indigenous contractors from oil and gas producing communities in the Niger Delta had issued the NNPCL, Kyari and others alleging an unlawful bidding process regarding the awarded pipeline surveillance security contract to Tantita. Recall that the NNPC Limited had engaged Tantita Security and other third-party security firms to help in the fight against crude oil theft in the country, and Tantite Security Services, which is owned by former Niger Delta Tom Polo. The suit comes amid the NNPCL's fight against oil theft. In 2024, the NNPCL had announced the arrest of a tugboat loaded with an unspecified quantity of illegally refined automotive gas oil along the coastal area of Rivers State. The oil giant announced the arrest during its weekly program, stating that 5 personnel managing the boat were being interrogated by the relevant security agencies. The arrest of the vessel was just one out of 155 incidents of crude oil theft recorded in the Niger Delta region between March and April in 2024. Now, according to the report, Rivers, Delta, and Bayelsa states recorded the most incidents of crude oil theft during that week. During the period, 38 suspects were arrested on allegations of crude oil theft and sabotage. Well, we'll continue to monitor this development for you on Business Point. Let's now turn over to the NGX Banking Index, which opened in the red on Monday as investors jumped major bank stocks in reaction to a policy shift announced last week by the Central Bank of Nigeria. Although the banking index staged a recovery from its earlier losses of over 7% in pre-market trading, it still ended the day down by 3.98%. In a circular released, the CBN directed banks currently benefiting from regulatory forbearance to suspend dividend payment, defer bonuses, and halt new investment in foreign subsidiaries. The policy reversal is part of the CBN's broader push to tighten oversight after the COVID-era forbearance framework, which had already allowed banks more flexibility in loan classification and reporting. Well, as the CBN begins a phased withdrawal of this support, concerns are mounting about the potential strain on banks' capital positions. Now we turn over to the Presidential Compressed Natural Gas Initiative, PCNGI, that has introduced a new framework to scale up the nationwide supply of compressed natural gas, CNG, in collaboration with the Nigerian National Petroleum Company Limited and the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, as well as the Gas Aggregation Company of Nigeria, GACN. The Mobility CNG supply framework is designed to ensure a steady, affordable, and sufficient supply of CNG across the country, with a strong emphasis on the transport sector. Speaking at the launch and implementation event held in Abuja, PCNGI Program Director Michael Uluwagbemi says the framework introduces a transparent concessionary pricing structure, as also reported by the media. According to him, the model reflects upstream and midstream costs while maintaining low prices for end users. He also says that the framework supports Nigeria's broader energy reforms by promoting domestic gas use, advancing cleaner fuel alternatives, and cutting transport costs in the post-subsidy era. Well, these are the news making rounds in the world of business. Let's take a rundown of what our highlights are. First of all, we talked about food prices, that the Lagos food market saw mixed price movement in June 2025, where we saw prices like dry onions increasing by 17.65%, and then we saw prices of peppers dropping by 29.41%, and other staples like maize, rice, flour, which saw significant price hikes due to strained logistics and seasonal supply gaps and macroeconomic challenges. We also saw that the naira strengthened against the dollar, trading between 1,585 naira to 1,590 naira per dollar in the unofficial market amid improved fundamentals and signs of peaking inflation, which dropped to 22.97%. We also saw a bond issuance that the federal government plans to raise 100 billion naira through a June 2025 bond offer featuring a 50 billion naira 5-year bond and a 50 billion naira 7-year bond. We also looked at regulatory developments for USSD charges that mobile subscribers will now pay directly for USSD services at 6.98%, 6.98 naira per 120 seconds following the introduction